All right, so I have a ton of updates regarding a number of companies that we've invested in on this channel, ranging from OPENDOOR, Tattooed Chef, HIMS, BIGC. It's going to be a whole updates dump on you guys, all right? But before we dive into that, I want to share some knowledge that will help us get through this bear market that we are currently in. Now, if you don't believe we're in a bear market, it's probably for two reasons. A, either your portfolio is heavily weighted towards Apple, Microsoft, Nvidia, or Google. If you've only got those in your portfolio, then you're probably thinking like, yo, Manuel, what are you talking about bear market? Okay, because you guys are sitting pretty, right? Or B, you might only be invested in ETFs that track the S&P 500 or the NASDAQ. But let me tell you this, right? We are in a bear market. Let me quickly show you this. So this is the NASDAQ currently, yeah, without the 5 biggest stocks. You can see the blue line represents the NASDAQ as it is with all of the 5 stocks included, but the yellow line represents the NASDAQ if you omit the top 5 biggest positions. So really and truly, this is where the NASDAQ will be if you didn't have the 5 largest stocks pretty much carrying the rest of the NASDAQ 100. It's insane. The NASDAQ would be down year to date minus 20%, okay? So that tells you how overweight these indexes are. And these 5 stocks alone are pretty much covering over the cracks and the reality that we are actually in a bear market. So if you're not heavily invested in Apple, Microsoft, Google, then you are feeling pain right now. And this picture is the best representation of that. The NASDAQ would be down minus 20%. And for me, that is a bear market, okay? Because it all started around June time, and it's just been trending downwards ever since, all right? So when you're hearing CNBC saying the NASDAQ's at all-time highs, the S&P 500 is at all-time highs, they are lying to you, okay? They are lying to you. It's not the truth. This is the reality, all right? So in my opinion, we're in a bear market. So we need to learn from successful investors before us how they were able to navigate a bear market, how they thought about a bear market, and ultimately how they succeeded, all right? So when the next bear market comes, which I believe we're in a bear market right now, and others are overwhelmed with fear, I want you to have the knowledge and fortitude to fear less, okay? So the first step is don't be fearful, all right? This fearlessness in the face of uncertainty will bring you tremendous financial rewards, okay? In fact, while others live in terror of bear markets, you will discover in this chapter that they are the single greatest opportunity for building wealth in your lifetime. Why? Because that's when everything goes on sale. And let me actually quickly show you a tweet, right? So this was at market open on Monday, and I tweeted, I received so many notifications in the last 8 minutes, I thought I was in trouble with my missus. Happy Monday in the markets, hashtag stocks. And this is the series of notifications I got on my phone. So Square was at a 52-week low. Teladocs was at a 52-week low at $88.67. Insane. NEO was at a 52-week low at $30.39. Corsair was at a 52-week low at $20.50. DNMR was at a 52-week low. Melly was at a 52-week low. And to be honest, there was a lot more notifications, but this was just the maximum I could fit in the screenshot. So it was crazy. I got so many notifications that so many companies were at 52-week lows. It was insane. And this is what the author of this book is talking about. The single greatest opportunities, because everything goes on sale, okay? So apart from Apple, Microsoft, Nvidia, these companies are not on sale, but when you look underneath the hood, there's so many incredible companies right now that are on sale. So it goes on to say here, imagine longing to own a Ferrari and discovering that you can buy one for half price. Would you be downhearted? No way. And this is so true, because if you think about it, the stock market is really the only market whereby the thing you want goes on sale or gets cheaper, and then you get scared or you get downhearted or you get upset. Whereas in reality, you can actually buy more of what you want for cheaper, but that puts off investors for some reason, okay? Investors want to buy when the thing's getting more expensive, when it's going up. You want to buy more, which is completely the opposite way of thinking, but this is what it means. Yet when the stock market goes on sales, most people react as if it's a disaster. Facts. You need to understand that bear markets are here to serve you. Facts. I love that line. You need to understand that bear markets are here to serve you. If you keep your cool, they will actually accelerate your journey to financial freedom. If you find internal certainty, you will actually be excited when the market crashes, okay? So the moral of the story is this. Don't be downhearted if you see your investments are in the red. If the companies are continuously performing, if the fundamentals and the financials of the businesses that you've invested in are improving and maybe improving fast, and the stock price is getting cheaper and cheaper, then that's an incredible opportunity that will bring tremendous financial reward in the long term. Okay, so take advantage of these deals, keep a cool head, and if you want to be part of a Discord group that focuses on that, then quick plug, you can join my Discord group in the Patreon link in the description below. As you can see, I share this with my Discord, as an important reminder, just to remind everyone in my Discord that, the bear markets are here to serve us. All right. So with that said, let's dive into the updates. Now, the first update is regarding OPENDOOR. Okay. So one of the key directors of OPENDOOR, this guy called Kefa Peel, I hope I pronounced that correctly, but Kefa Peel, he actually took advantage of the share price going on sale. All right. So on December the 2nd, you can see that he picked up 137,533 shares. He acquired them at a price of $14.50. Insane. All right. That's the fact that we have OPENDOOR at these valuations right now is just absolutely insane. And when I saw this, naturally you get excited, you get happy, because it shows that the director believes that this company is crazily undervalued and is going to take advantage of it right now. In fact, Peter Lynch has said many times that, insiders might sell their shares for any number of reasons, but they buy them for only one. Okay. They think the price will rise. So seeing one of the key directors picking up shares, it's a very comforting feeling. And he obviously has the belief that the share price will rise, maybe with Q4 earnings, maybe Q1, Q2. But he's a director that has inside information. And based on his information, he's essentially buying more stock. So that's really reassuring to see. Now, the next update is regarding Tattooed Chef. And we have a new analyst that started covering Tattooed Chef. So the update is essentially Cowen starts Tattooed Chef Inc. at Outperform. Okay, so Cowen analyst Brian Holland initiates coverage on Tattooed Chef Inc. and the rating is for Tattooed Chef to outperform. So essentially in the earnings calls, we've pretty much only had Jefferies and Roth Capital. So we're going to have another analyst now that will be covering and probably be attending the earnings calls to ask more questions, which is very good. So Wall Street are starting to pay attention to Tattooed Chef. So don't sleep on the chef, guys. It's still early doors, okay? So the next update is regarding HIMS, okay? So we have an article from one of the analysts at the Motley Fool, and they said 3 no-brainer stocks that I would buy right now without hesitation. And they went on to list a few of them. So the first one is Affirm. Now, I'm not too big on the buy now, pay later business model. And the reason why I'm not that big on Affirm and that business model is because if you go back to 2008, right? If you go back to the financial crisis, most of these buy now, pay laters are for stuff like maybe if you want a new television, if you want a new freezer, if you want a new washing machine. Typically with these larger items, that's usually where you'll have a buy now, pay later, right? But remember, these are installments that you're paying. Now, if we are to enter a recession, which you've got a lot of analysts saying that, 2022 will have a recession because we printed so much more money in 2021, we're going to go into a recession, right? So if that is true, and we do enter into a recession, then, look, people are going to prioritize their rents or their mortgages. People are going to prioritize their car payments. They're going to prioritize much more of their necessities as opposed to the payments for the fridge. And if that is the case, then you'll find Affirm will struggle because a lot of people would default. I'm not too keen on Affirm, all right? So Monday.com was their second pick, which I'm not really that keen on, to be absolutely frank. And then their third pick was HIMS and Hers, okay? So one of the comments that they said here is that unlike other stocks on this list, HIMS and Hers isn't only on a pullback, it's flat out cheap. I want to show you guys the stock price, but I'm sure you guys have already seen it. It's just been ugly, okay? But it's been fantastic for the long-term investor because we've been able to pick up more shares for even cheaper, okay? Shares trade at a PS ratio of just under 5, despite growing its revenue by 79% in its most recent quarter. It's It's just crazy. There's a huge disconnect between the fundamental and the financial performance of the business and the stock, okay? But that represents a great opportunity for us, okay? So if HIMS and HERS can continue to post strong growth, investors may begin to trade the stock at a higher valuation as competition concerns go away, okay? So the stock's market cap of 1.2 billion leaves a lot of room for great returns if HIMS and HERS can make its mark on the massive healthcare industry, and that's exactly what the company is doing. So that's the update regarding HIMS. I mean, the risk reward in this stock right now at its current valuation is just absolutely juicy, and it represents a great opportunity for us to build our positions for even cheaper. Now, next up, we have Big C. So Jim Cramer had his Mad Money lightning round, and essentially people call up to ask Jim Cramer for his views regarding a certain stock. I don't know why people do this. The guy is just flat out wrong most of the time. But anyways, someone called him and asked him about Big C, and he didn't like the company. He said that I think that this is involving the concept of the concepts. I've been saying it's the conceptual versus the tangible. This is a conceptual stock, okay? This company is losing a lot of money, so it's lost its luster. It's a strange interaction, but it's tried and true. That's why the stock is going to have a hard time here, okay? So he's saying, essentially, stay away from the stock. It's losing a lot of money. So this is what Jim Cramer had to say about Big C. But let's just take a look at Big C here on Stock Unlock, right? So you can see the revenue has been going in one direction, which has been trending upwards. The gross profit has also been trending upwards. In fact, Q3 was Big C's record quarter, okay? They had an incredible quarter with a recent acquisition, which helped boost revenue even further. And as a result, the revenue and the gross profits have been heading in the right direction. He says the company is losing a lot of money. And I mean, if you are just looking at the charts alone, you can say, okay, yeah, he's right. They posted their worst loss on record so far. Although we did show record revenue growth, yes, the net income did take a hit, but there's a big reason why, okay? So if you just dig a little bit deeper, Jim, dig a little bit deeper into the net loss, you can see from this net loss, a huge chunk of this net loss was based on stock-based compensation expense, okay? So that went up and that hit our bottom line. Also, the company made an acquisition. All right. And with acquisitions, there are acquisition related costs, which we didn't have in the prior year quarter. OK, so all of these additional expenses impacted our bottom line. And there's some more information regarding the acquisition. It was of Freedonomics LLC on July 23rd, 2021. So a recent acquisition. But at the end of the day, the results of the acquisition saw us post record revenue, record gross profits. Insane. And if you look at our margins as well, it didn't impact margins. We've been consistently reporting margins of between 75 and 80% gross margins. Insane. Okay. So in my opinion, Jim is just talking out of his backside like he normally does. I mean, yeah, it is what it is. But of course, he has an impact on the stock. And as a result of his comments on Thursday, the stock market reacted. And not only did Big C set 52-week lows, it also set a new all-time low. I mean, if you scroll out, I mean, the company has never been this low before. So again, think about it, right? Look at the growth, okay, of the revenue and operating incomes. It's been going up, okay? However, the stock has been going down. Fantastic opportunity, okay? And it's the same story for the likes of HIMS, Tattooed Chef, OPENDOOR, Airbnb, OPAD, all of the companies that we talk about on this channel. The performances have been going upwards and to the right. However, the stock has been going downwards and to the right, okay? And these are typical signatures of us being in a bear market. So going back to where we started, it's in these moments that you have to be fearless, all right? Know what you own and why you own it. These are one of the single greatest opportunities to build our wealth in the long term. Know what you own, why you own it, and keep following the business. Ignore the stock price. So I hope you gained a lot of value from this video. If you did, please make sure you smash the like button. If you're new to the channel, hit that subscribe button and the notification bell to stay up to date with all of my latest videos. If you want to join my Discord group, the Patreon link is in the description below. Check us out if you are interested in staying up to date with all of my latest buys, sales, and my research notes. And with that said, thanks so much for watching, and I'll catch you in the next one. Peace.